Okay, so this is section 2 of 6 in the QuickBook Online Payroll Certification Exam. So as I said, 1 and 2 are pretty much basic payroll process questions. So this is review from section 1. I did just give you a quick snapshot of this, but let's read each section. So these are the 6 pillars of the payroll process. So you first would define payroll policies within the company, record employees' documents, calculate the payroll, pay out wages and taxes, record all payroll, and then file the payroll returns, the 940 and 941. Now, we'll be talking about many of the documentation process in the next section. We're also going to revisit exempt versus non-exempt. So remember in the first video, we looked at this topic. We said the key differences between exempt and non-exempt employees is that a non-exempt worker is entitled to minimum wage and overtime requirements under the FLSA. Exempt employees are usually not eligible to get overtime, and that's typically because they're excluded from the minimum wage requirements. Key attributes under the exempt employee is they're usually at a fixed salary. Their salary amount meets the minimum wage threshold as deemed by FLSA. And we're usually talking about professional roles. So they have a higher level of expertise and knowledge. Examples of these roles are often found under these, but not limited to, human resource professionals, accountants, CPAs, attorneys, and others that deal with more specialized or compliant fields. Now, the non-exempt employees are generally blue-collar hourly rate employees who must be paid an overtime rate of 1.5 times their hourly rate beyond the 40-hour work week. Key attributions of non-exempt employees include, but are not limited to, they earn an hourly rate that can vary. They charge or keep time, so they clock in and out. They're typically non-professional roles that require a lower amount of expertise or certification level. And a role would commonly be, but not limited to, warehouse workers, contractors, freelancers, interns, retail associates, and servers. Now, consequences for misclassifying a worker. Here's another review. So let's say, remember we had talked about you have to identify whether you have an employee or if you have a contractor, which would fill out the W-9, and you'd give them a 1099 in January of the following year. So we had this picture that came in the training section that talks about the consequences. You can have to pay $50 for every W-2 that was misfiled, up to 3% of the wages of the classified worker, up to 40% of the FICA, the FICA taxes that are not withheld, and up to 100% of the matching that was not held. So you'd be responsible for the 40% of the employee side and then 100% of your side. The IRS can impose additional fines and penalties if it suspects fraud or intentional misconduct. For example, the employer could be subjected to penalties that include up to 20% of all wages paid, 100%, as we just said, of the FICA taxes on both the employee and the employer, and criminal penalties up to $1,000 per misclassified worker. So these are additional on top of it. And here's the worst. Up to 1 year in prison can be imposed if they feel like you are maliciously putting employees that clearly should be classified as an employee, you put them as contractors. In addition, the person responsible for withholding taxes can also be personally liable for any uncollected taxes. In the event a company does misclassify an employee as a contractor, the company could file what's called the VCSP, the Voluntary Classification Settlement Program. And this gets you out of some, not all, but some of the penalties. But to avoid all penalties, the company must provide a signed W-9 and 1099 for that contractor. So if you were charged with it and you want to avoid all penalties, then you need to provide a signed W-9 and a 1099 for that contractor. All right, going back to the payroll process and the hiring process, when a new employee is brought in, there are several steps that are in the pre-employment process. Once hired, HR will start an employee file where certain information must be verified, recorded, and stored. You will review policies with the new employee and have them sign any necessary documents. Now, calculating gross pay. Once you hire someone, you normally will sit down and discuss their pay. Either they're a salaried employee that gets a set amount on a weekly basis, or they're an hourly employee and they're told what their hourly rate is, and then therefore they would qualify for overtime and so on. So the Labor Department officials recognize that in some industries it is common for employers to record the starting and stopping time of employees to the nearest 5 minutes or to the nearest 1/10 or 1/4 of an hour. That used to be a question. I didn't see it in sections 1 or 2. I don't know if it's going to be in 3, but this used to be a question. That's why I had this in bold. Labor Department officials accept rounding, provided that it is used in such a manner that it will not result over a period of time in failure to compensate the employees properly for all the time they have actually worked. So going further with the overtime calculations, according to the Department of Labor, the FLSA does not require overtime pay for work on Saturdays, Sundays, holidays, or regular days of rest, unless overtime is worked on such days. So, and that also could be on the state level. The state usually determines also if overtime is pertaining to any of these Saturday, Sunday holidays. Overtime is calculated by 1.5 times your regular rate for time worked beyond the 40 hours in a work week. So if an employee was paid bi-weekly and they worked 33 hours for the first week and 43 hours in the second week, which 8 hours of that was holiday pay, and that's also included, what hours would be compensated? Oh, okay, so that was included beyond the 43 hours. So they worked 73 hours, right? They had 33 hours in the first week and 40 in the second week. 3 of these hours would have been overtime. So 73 hours of regular rate, 3 hours overtime from the second week, and then 8 hours of sick or holiday pay. So here are the default pay periods. I put this in the last week, so it's just review. The last, not last week, well, it was last week actually. In the last video where I listed this chart that was in the training section, showing you what the default hours were for the different pay schedules, as well as the number of pay periods throughout the year. Calculating wages. So there are other ways to pay employees. Here are the different type of supplemental other than regular pay: commissions, bonuses and severance pay, sick and paid time off, and tips. Now, commission refers to the varying compensation paid to an employee after completing a task. It's usually associated with sales. So you only have sales commissions, or you can have some commissions based on the number of items. Bonus and severance pay refers to the accrued but unpaid wages for an agreed upon amount. Sick and paid time off is accrued time or paid to the employee that they can use when they're unable to work. And the last one's tips. We all know what that is. Gratuity payments made by customers for service provided. All right, so overtime exemption for commission employees. According to the Department of Labor, if a retail or service employee elects to use the Section 7I overtime exemption for commissioned employees, 3 conditions must be met. This used to be a question. I think I did stick it in here, but I didn't see it in the list of questions. But I still have it in here. So if you want to write this down, and I also have it as a question, these are the 3 conditions that must be met for overtime exemption for an employee, a service or retail employee that gets paid through commission. And the next one's piecework calculation. They also took this question out. I don't know if it's in section 3, so I did include this because this is part of calculations. There are several selections in the Pro Advisor training tab. One found is in the specialty course tab, the payroll specialists. Fundamentals. I don't know if that's accurate. This is from my old, so I know they made changes. These training modules address many of the topics covered in the exam. A few of the topics need to be addressed a little bit more in depth. Let's look at piecework calculations. So you're getting paid usually per piece. So it can be used by any business that wants to pay its employees based on the number of units of production that they complete. The simplest way to calculate piece rate pay is by multiplying the number of units produced by the rate per unit. The employee must get at least minimum wage. So if their piecework rate pay falls below that, then they automatically have to at least get the remember, it's $7.25 federal. So $7.25 times 40 would be $2.90. So they had to get at least $2.90 in the 40-hour work week if that state still adhered to the minimum wage. But obviously, if the minimum wage is different or it's stated in the question, then you would just take whatever the minimum wage is times 40 if their piecework rate did not meet this amount, then they'd get paid this amount. So piecework normally, let's say, you get a flat rate of $10 per item made, and within your work shift, you made 20 items. You would just go 20 times 10 is 200. So that's how you would do it. You just multiply the units by whatever the rate is. And again, I don't see a question like that, but I just wanted to provide this information for you. So here's some questions. Which 3 general factors can help you determine if employees should be classified as exempt or non-exempt? Specific responsibilities and job duties, amount of money earned, and type of work performed. Which of the following best describes non-exempt employees under the FLSA? Employees who must be paid overtime after the 40 hours in one work week. What are the factors included in the 6 pillars of a robust payroll process? I just put all 6 of them here for you. Write those down in your notes, all 6. The question could say, which one of these fall under the 6 pot, or which 2 of these, or which 3 of these? Have them all in your notes. So write all 6 of these down, and you'll be fine when the question comes up. The employer could be subject to criminal penalties of up to what amount per misclassified worker? So if an employer misclassified a worker and put them as a independent contractor instead of an employee, the criminal penalties could be up to $1,000 per misclassified worker. Which statement is true about penalties for misclassifying workers as contractors rather than employees? To avoid all penalties, the company must provide a signed W-9 and 1099 for that contractor. These two go in hand because to issue a 1099, you have to have a W-9. Which 3 wage types are not considered regular pay wages? I just went ahead and put them all here, so just have them all in your notes. Commission, bonus pay, severance pay, sick pay, paid time off, and tips. So these are 6 of them. Have them all in your notes, and if they ask for 2, 3, 1, you have them all. You should get the answer correct. To use the Section 7I overtime exemption for commissioned employees, which three conditions must be met? That was that slide I showed you. Write all these 3 down. This used to be a question. I don't know if it still is. It's good to have in your notes. What are the default hours for the pay period that is someone who's paid bi-weekly? Bi-weekly, that's 80. That's 80. What are the default hours for pay period for someone who gets paid semi-monthly? Semi-monthly would be 86.67. 86.67. That's in that chart. I'd have all that information in your notes because they might ask monthly, they might ask quarterly, whatever it may be. Have all that in your notes that's in that table. Okay, a company pays its employee bi-weekly. Joe worked 42 hours in the first week, 38 hours in the second week. And then in that pay period, they're also going to include a holiday, 8 hours of holiday pay. So what would his pay look like for that bi-weekly check? Well, he'll have 78 regular hours, right? Because you're going to take 38 plus 40, because 2 of these hours are overtime. So 78 regular hours, 2 overtime hours, and 8 holiday hours. Jane Doe is a salaried salesperson with a bonus incentive plan for sales over her sales quota. So her quota is $1 million per year. For every dollar beyond that quota, so every dollar beyond $1 million of sales, she gets 5% as a bonus. So in 2020, her yearly sales were $2 million. And then she gets a base salary of $75,000. What were her total yearly earnings? So you're going to take the 75, and then you're going to add it to the 5% bonus times 1 million. It's 1 million because her quota is 1 million. So you're going to take 2 million minus 1 million and say, okay, her bonus is on 1 million. So 5% of 1 million is 50,000. Add that to the 75,000 and you get $125,000 was her yearly earnings. 125,000. Okay, the second section goes back to the hiring process. FLSA says employers must collect and store the following data for each employee. This information can be either recorded on paper or electronically. Authorized people must have open access to these documents. So you start off with your general employee information, tax withholding forms, time and attendance records, payroll reports, and employment agreements. We're going to revisit all of this again for Section 3. what we're going to focus on here is the employer and employee taxes. So once an employee begins work, he is now added to the company payroll. Did you check out the Excel video that I suggested you watch that deals with payroll taxes? If not, just make sure you take good notes here. If you did, this will just be review. An employee's check will show their gross pay. That's wages before taxes and deductions. And then their net pay, which is the actual amount of the check or deposit into your bank account. There are several types of payroll taxes. Some of these taxes are paid full by the employer, and some of them are paid full by the employee, and a few are paid equally by both parties. Once collected from the employee, the employer must remit the collected taxes to state and federal government tax agencies, to the respective agencies. So the first thing we're going to look at is federal income tax and state income tax. So FIT, federal income tax, is determined based on these four things: your marital status, the number of claimed allowances, your gross pay, and the pay period length. Like, are you getting paid weekly, bi-weekly, semi-monthly, and so on. So based on this, you can either do one of two. You can refer to wage bracket tables, which are given by the IRS, or you can use the percentage formula. So these are the two ways you can calculate FIT. Then you have SIT, the state income tax, varied by state. In 2022, there were 9 states that do not have state income tax. That would be Alaska, Florida, Nevada, South Dakota, Tennessee, Texas, Washington, Wyoming, and New Hampshire. The other ones are varied by states. In 1935, federal law called the FICA, which is the Federal Insurance Contribution Act. It became effective actually in 1937. So this is basically broken down into two things. It's Social Security and Medicare. So it's also called OASDI, which is Old Age Survivors Disability Insurance. That's Social Security insurance. And the other one is Medicare. Now altogether, it's 12.4% for Social Security. However, half of it is paid by the employer and half of it is paid by the employee. So that means that the employer pays 6.2% and the employee pays 6.2%. And then for Medicare, it's 2.9%. So the employer pays 1.45 and the employee pays 1.45. Now, if you are self-employed, like you have your own business, then you're responsible for the 12.4 for Social Security and the 2.9 for Medicare. In 2022, the cap for OASDI, the cap for Social Security, was at $147,000. However, for the test, they're still using 2021. So I put that here too. 2021, the wage cap is $142,800. Okay, and what does this cap mean? Once an employee meets this threshold of earning, they no longer are liable to pay Social Security tax. So once in 2022 you reach 147,000, you no longer have to pay Social Security tax. And for 2021, it was 142,800. Now, there is an additional Medicare tax paid by the employee, and these are for employees that make over $200,000 a year. And the additional Medicare tax is 0.09%. Unemployment. So unemployment taxes provide unemployed workers with benefits while they're out of work. It was created in that same year we saw with Social Security in 1935. And then we have two things that fall under unemployment. You have the federal and the state. The federal, which is Federal Unemployment Tax Agency, FUTA, that tax is 6%. Now that's usually there's a credit given to the state, but we're not going to get into that. So 6% basically is what unemployment is. Normally, it's broken down like this on average. SUTA actually gets 5.4% and FUTA would get 0.6 because FUTA is just really the administrative. So they just pay administrative costs. They don't actually pay the benefits. The benefits are paid on the state level. Okay, so that's just the breakdown here. But the thing that you really need to know on this section is that it's 6% for unemployment, and the wage-based limit is 7,000. So once the employee has made 7,000, they no longer have to pay unemployment. It's just up to 7,000 for them. The other side note here is who qualifies, who automatically qualifies normally for unemployment. That would be someone who was laid off or an employee that was a furlough employee. So furlough is a mandatory temporary leave of absence which the employee is expected to return to work or to be restored from reduced hours. So sometimes we saw this maybe with the pandemic. I think a lot of people didn't know what furlough was, and then they knew what furlough was after the pandemic. So the pandemic had a lot of companies either close down temporarily or reduce their hours or reduce their services and what their ability was to provide to their customers. And so therefore they took their employees and either put them on a temporary furlough, meaning they would be returned back to work whenever things went back to normal, or they temporarily gave them a reduced work week where maybe they were working 40 hours a week, now they're working 15 hours a week. So that would be furlough, or they were laid off. I mean, if you were laid off, that means you're not working at all. And that's for an undetermined time. We don't know. It could be permanent. All right. Workers' compensation insurance protects employees against losses like accidental injury or death while working. It's paid by the employer in most states. Insurance is based on total estimated gross payroll. So normally it has the things that are taken into consideration is the industry, like where they're working at, the pay scale, and the claim history. And the industry is huge because obviously if you're working at a warehouse, you're more likely to hurt yourself than, let's say, if you're working as a school teacher. Most school teachers don't go to work and hurt themselves. However, you know, it's more likely that you could hurt yourself in a profession where you're physically doing something. So here's some questions. What are employer paid taxes? That would be Social Security and Medicare, because remember, employer pay half and then employees pay half. And the other one is federal and state unemployment taxes, because they remember. Now I do want to state this, and I said this the last time they had the exam. There are some states, and Pennsylvania is one of them because it's where I work. I live in New Jersey, but I work in Pennsylvania, and Pennsylvania is one of the states that does require that the employee pay. It's a very small percentage, but there are some. I noticed, if you were watching these videos before, I did take note that they were incorrect, but they made a correction and they just pulled it out. So they didn't even mention employees paying or not paying FUTA or SUTA. But yes, no, some states do require employees to pay toward unemployment. And it's called SUI, I believe, state unemployment insurance. I think that's how they put it on your check. But what are the employer paid taxes? That would be Social Security and Medicare because they pay the half, and then federal and state unemployment taxes. A business has a gross payroll of $136,988.40. That is taxable for federal income, Social Security, and Medicare. So the FIT, the federal, is $24,117.87. Social Security and Medicare is $10,479.61. So now they're asking, what would be the total deposit liability? Now, remember, this is money that they took from the employees, correct? So since they took this from the employees, now the business is also responsible for matching the Social Security and Medicare. Remember, I said the employee pays half and the employers pay half. So if this is what they collected from the employees, their real tax liability, therefore, would be this amount, the $24,117.87, and then double this amount, because this is what they took from the employees, and they have to match it. So we would take this number times 2 and then add it to that, and you would get the total liability would be $45,077.09. How many states do not have SIT, state income tax? 9, and I listed those earlier in the slide. Which of the following shows the correct tax types with the corresponding tax rate? And they use 2021. So Medicare tax is 1.45, Social Security 6.2 for the employee and the employer. Additional Medicare tax is 0.09%, and then FUTA is 6%. Which of the following shows the correct tax type with the corresponding maximum taxable earnings? And that's for 2021. Remember, I said they use 2021. It has changed for 2022. So you're using the 2021 rates. And for FUTA, it's $7,000. Social Security, it was $142,800. So $142,800 for Social Security. Medicare, there's no limit. And additional Medicare, it was only for people who made above $200,000. So those were the caps. As a general rule, to which group of employees are unemployment benefits most often provided? That would be laid off employees. Laid off employees or furlough employees. What is a furlough employee? It's an employee who has been temporarily let go, or it's an employee whose work week has been reduced because of decreased sales in product, or because of environmental issues, or as we see the pandemic, and stores closed or shorten their hours. So whatever the issue may be, they've either been temporarily let go or their work week has been reduced. Which information is not required to be maintained in an employee's permanent file? So what is required is their name, social security number, rate of pay, address, birth date. By the way, I put here a list that actually came from section 1. I put the list in section 1, so you should have that in your notes. What's not required? Religion, height, or marital status. What is the tax rate for FUTA? That's 6%. Remember, I didn't get into it because FUTA is usually 5.4, and therefore FUTA gives them that tax break of, and they would only really charge 0.6% because it's administrative. But we're not getting into that. On this level, they're only saying, what's FUTA? It's 6%. And then the last question I have here are which taxes are required to be withheld from an employee's check? That'd be Social Security and Medicare, and then federal and state. And that would be FIT and SIT. Now, I did say note, unless they claimed exempt on the W-2. Now, when you first hire an employee, what do they fill out their W-2? They can say they're exempt. And what would make an employee say they're exempt is if the year before they paid no federal taxes. So if they paid no federal taxes, they can claim exempt, and then no taxes would be taken out of their check. But that's something they don't go into or ask questions about. I just wanted to add that in there. All right, so this would end section 2. It was fairly quick because section 1 and 2 are very simplistic. As we'll see, 3 and 4 get a little bit more difficult, and then 5 and 6 kind of give us a whammy. So I'll try to get 3 out in the next 4 to 6 days if I can. And I was really hoping to get this whole thing done before the end of the year, but it doesn't look like that'd be possible. But hopefully you have good notes to take at least section 1 and 2 at this point. If you did take the test and you came across anything new, please put it in the comments. All right, thank you for watching.